Shares of South African gold mining company Harmony Gold have outperformed the metal price in the past 6 months, rising over 6% in the period where gold prices have largely flatlined. However, Harmony stock is down around almost 4% since January. The mining company, which also has copper assets, recently released its operational update for the September quarter, showing cash flow rising quite strongly, up 17% in the period to 857 million rand. Costs only climbing 4% over that same period. For the latest read on what is happening in the mining sector as well as the outlook, I'm joined by Jared Kutsia, the Investor Relations Head at Harmony Gold. Jared, thanks so much for your time and taking the time to join us in studio.
That's a pleasure. Thanks, Fifi. Good to be here.
So, first of all, just your read on the state of mining right now. And I just ask that against the backdrop of it looks like the party in the boom times are either over or are coming to a really sharp end. If we just base it on what commodity prices have done since the start of the year, they've tumbled in a sense. How would you describe the state of the mining sector right now?
Thanks very much. I mean, the mining sector as a whole, I mean, it's always been one of the leading sectors in the country. I mean, an example that happened during the COVID crisis, the mining sector stepped up and really took the lead in terms of how we vaccinated our employees. And I think a similar approach needs to happen now as these dynamics change. We've got a very strong relationships with the Department of Minerals and Energy. The Minerals Councils are doing a very good job, but we need to approach government and understand how we can broach these challenges, specifically around regulation and some of the bottlenecks. I mean, we at least we aren't a bulk metals producer, but the challenges that are happening on the rail and other sectoral issues which we need to overcome. And I think there are absolutely solutions, but it's just a question of working proactively with the government and how we can best find a solution which allows us to actually benefit from our resource base. I mean, we've got a phenomenal opportunity in this country. There's absolutely an opportunity for far more investment to come through.
Yeah.
We just need to create the environment which allows investors to actually see that there's an opportunity to. I mean, first and foremost, guys want to make money. You invest in an industry or a sector to deliver returns, but those returns is where we create that shared value for all our communities and our people. So there's an absolute benefit for everyone. We just need to get a couple of hurdles removed from the way.
Yeah, and I mean, when Harmony Gold makes money, but South Africa, in a sense, makes money because you guys pay the revenue service a whole lot more in taxes. But you mentioned some of the challenges, specifically regarding the situation at the rail and the ports. And we know the challenges are well known. I mean, amplified by things like the floods as well as the recent strike, which is now largely out the way, I would think. I guess I'm trying to understand whether you are seeing an improvement in your ability to move your product around at this stage, or has progress been slow?
So we don't use rail to transport gold. We obviously have a far smaller resource that we need to get around. But an example which I could use is probably around the energy and the regulations which changed around self-generation. I mean, we've got 30 megawatts of renewable energy which we're busy rolling out, followed by 137 megawatts. And those are the changes which will accelerate very quickly if we can get those hurdles removed. I mean, there are a number of headwinds. I mean, I think the Eskom crisis at the moment has been very detrimental to many industries, specifically the aluminium industries and the PGM space. Thankfully, we haven't been too badly impacted by that. But, we have to find solutions. And I think that's really the way we have approached it. We're comfortable navigating these headwinds that we face in South Africa, and we understand South Africa. It's just being allowed or enabled to create the solutions which are required. And I think the mining industry is certainly very well positioned to benefit the country. We've got, Harmony with its acquisitions of Moab and Mponeng and related assets from AngloGold Ashanti, acquired some wonderful water assets, in terms of the pumping, but it does give an opportunity for us to look at how we can benefit the communities through these assets. So it's actually taking a slightly horizontal view on things and not specifically looking at let's take our capital and invest it solely in production. We've actually got to look at taking our assets and seeing how can these assets benefit the community. Yes, we mine gold, but that gold that we take out the ground we can transform that into value for everyone. And I think that's really how we're approaching things now.
All right. So specifically value for your shareholders, though, and you did touch on acquisitions, and I know last month you announced an acquisition over in Australia, a copper mine. How is that done? How's that going?
No, so we just need to get our various approvals need to still happen. So we're expecting that transaction to close early next year, maybe sooner, but I mean, really, it's just some regulatory and some prescriptive approvals that need to happen. But assuming that does go through as planned, it does really bring forward our copper story. For a long time now, Harmony's had the Wafi-Golpu asset in Papua New Guinea, and that's really been this tier 1 copper gold porphyry, which we've been developing and talking about for a long time now. But the Eva copper actually brings forward our copper prospects. And I think that also diversifies the business. You've got that counter-cyclical diversification which it brings to the business. You've got some exposure to a tier 1 jurisdiction through Australia. It de-risks the business. So it really does meet all our investment criteria. And I think the copper golds, the pairing of those two minerals work really well together, given just the geology and how often you find copper and gold in these porphyries like we found in Papua New Guinea, but also like Eva's got a gold credit with it as well.
All right. So are you, as a mining company, are you guys in acquisition drive? I mean, we have seen quite a lot of corporate activity in your space, and I'm just wondering, I mean, as we wrap up 2022 and as you're looking to close the deal on the Eva transaction, are you looking at other assets presently at this moment in time? Are you looking elsewhere, and if so, where?
Yeah, so we are looking. I mean, we've been quite clear. I mean, our growth phase started in 2016. We acquired the remainder of the Hidden Valley asset, Moab Khotsong from AngloGold in 2018, Mponeng and related assets 2020, and now 2022 we've acquired Eva Copper from Copper Mining. So we are in that phase, but it has to be affordable. Now, I think what is important is that we've got an abundance of opportunities to invest in locally. Some of our reserves and resources that we've got in South Africa, you can't replicate that through acquisition in terms of your dollar cost per ounce. So we're absolutely investing in these assets, but we are always looking at opportunities provided they meet our criteria. And I think one of the important criteria is we need to de-risk the business. We're bringing our costs down, we're looking for long life assets, and I think what is important that we also progress that copper gold story.
Sure.
So we've got our hubs in South Africa and Southeast Asia, and we want to stay in those regions. We're not going to look at, for example, North America or South America. We want to stick to continental Africa and South Africa, Southeast Asia, and now Australasian area. And I think those really give us the direction as to how we're going to progress. But in terms of near-term production, early stage exploration and producing assets, we've now got to the stage where if we do progress our growth strategy further, we'd probably look at acquiring a producing asset.
Okay, so how are you going to pay? I mean, a really strong increase in your free cash flow over the September quarter, but a strong increase in the deadline as well. And we are in this environment of rising interest rates, and we do know shareholders are a bit touchy about companies that take on more debt in this environment where the cost of capital is higher. So how are you planning to pay for your acquisitions?
I mean, there's a number of ways. I mean, this existing transaction we can fund through cash and available facilities. I think when you start looking at the larger capex bill, we'd need to first of all complete the feasibility study, the updated studies, and then understand what mechanisms are available. I mean, there's numerous opportunities for us to explore. Bridging finance, streaming bonds. There's a whole host of opportunities for us to look at the funding. We'll cross that bridge. But encouragingly, the banks and all our financiers have been very, very positive in terms of stepping forward, given the fact that it's a green metal. I think the fact that we are looking to allocate capital to decarbonisation as well. So that it really does, it works for us in terms of the projects we're pursuing. And I think we've got some great prospects ahead. So we're very excited about copper and our gold opportunities.
All right, so just a parting shot from a traditional gold miner on what is happening in the digital gold space right now with the latest meltdown of Bitcoin and crypto, calling it a crypto winter. There's a whole host of views, some saying that it might take longer to get out, but we'll get out of this. Others saying that this is doomsday. Just what's your take on that, and what do you think it has done to the appeal of gold as a safe haven, which actually in itself hasn't really stepped up to the mark this year. If you look at what the gold price in itself has done, practically nothing, despite the fact that the world has become a lot more uncertain since January.
So in dollar terms, the gold hasn't done what we would have expected. In rand terms, it's been fantastic.
Okay.
So in other currencies, gold has done exactly what we would have expected. I think the problem with the crypto space is it's in its infancy. There's no regulation. A lot of people don't understand it. And it's like anything. When there's easy money to be made, people step in
and make the money.
And make the money.
And lose the money as well.
But it's easy come, easy go.
Yeah.
And I think that's really where we still believe that gold will always maintain a store of value. I've been reading a book, one of the fund managers in the 90s, and talking about does gold have a space as a store of value? What's happening with the marginal gold mines in South Africa? What's happening with... And that narrative hasn't gone away. It's still there 20 odd years later. But we've proven now, I mean, we can extract value, and I think gold does have a very, very clear place in society. I think as a lot of the dynamics which have been in place, the low interest rates, the stimulus that's happened through the quantitative easing and the various government central bank programs, as those start unwinding, I think we'll see gold begin to show its value and its shine again.
All right, we're watching, because those have unwound quite a bit so far since November, but the dollar price, as you did say, hasn't quite responded. So we'll wait to see when that catch-up happens. Jared, thanks so much for joining us in studio. Jared Kutsia, the Investor Relations Head at Harmony Gold.